interest rates may have just peaked. We're going to talk about that and more right after this. Hey there, it's Ryan Skaggs, and this is the Mortgage Minute. Thank you so much for tuning in. This channel is dedicated to everything mortgage, real estate, and interest rates, and we're going to start with those interest rates. So I put a link below to the average 30-year fixed according to Freddie Mac. I put that in every single video, so if you're checking out any of the weekly videos, I've always got that link down there so you can follow along with where interest rates are going. We actually saw a nice little reprieve from week over week, so we're down to 5.70 is the average 30-year fixed according to Freddie Mac. Again, that link is below. While you're down there, I would be forever grateful for the subscribe. Click that like button, click that subscribe, and click that bell icon to be notified, as again, I'm putting out weekly videos on the channel. So now let's talk about why rates potentially have peaked. Now, the Atlanta Fed, and again, I'll put a link below, they just came out, it is June 30th, and they came out and basically said that GDP, or gross domestic product, is potentially going to be negative for the second quarter of 2022. Now, the reason why that's important is that if that's the case, we're potentially already with that bad word, with that nasty word, recession. We are potentially already in recession because the first quarter of 2022 was negative GDP. So what does that mean for you, for an average home buyer? That means if we are into a recession, that the Fed has raised interest rates. We're probably not going to see that potentially happen to the level that has before, and that we have seen a peak in interest rates. Now, over the last year, we've seen rates move up almost 3%, 2.7 plus in 1 year time. So a very significant rise in interest rates. They were artificially low, but I do feel like now they are unfortunately a little higher than probably what they should be, and it has definitely been a roller coaster ride over the last 6 months, or the first 6 months of 2022. So why interest rates potentially have peaked, that inflation news, that GDP news, the Fed potentially not needing to raise interest rates, and maybe they got a little bit better handle on some of that. There's other data and news out there that would say inflation is still at an all-time high, but if we're potentially starting to see GDP be at a negative, that's going to be a sign that we're going to have potentially a recession. Now, for people that are looking to purchase a home, or if maybe you already own a home, that's not all bad news in terms of the real estate market. Typically, and if you look back, over 75% of the time during a recession or soon after, housing prices rise. That's just plain and simple fact. Housing prices typically rise by a small single-digit percentage during and after a potential recession. So there's only a couple of examples where they did not. Obviously, we all know the Great Recession, 08 to 10, and then back to 1990. But if you look over the last 100 years and see when they happen, you're going to see that housing prices typically increase. So if you go back to kind of Econ 101, Finance 101, if you took those back in college, they would typically tell you housing prices are going to follow inflation. Inflation's still relatively high, right? So we're likely still going to have a pretty darn good time to buy. We're going to have potentially a more balanced market later this year, with potentially we've seen rates kind of peaked from where we're at today. So end of June, first 6 months in the book. It's been crazy. Let me know what you think interest rates are going to do in the comments below. Thank you so much for tuning in, and we'll see each other again very, very soon.